What is up, and welcome to the first Denver and the Suburbs real estate market update for 2024. This is your January 2024 update. We're going to talk a little bit about 2023, what's to come in 2024. We'll get into some demographics and things that we saw happen in Colorado over the last year and kind of what's to come for 2024. So stay tuned. We'll dive in. What's up, guys? My name's Jeremy Kane with eXp Realty and Living in the Denver Suburbs YouTube channel. We do this every single month, so if you find something interesting and you want to just stay up to date on the market, I am a top selling real estate agent in Denver, and I pride myself on staying in the know of all things real estate market so I can bring it to you on what matters. So like, comment, subscribe, and let's get into it. Okay, so 2023, we saw an average price increase of around 4% in the Denver area. Now this is the average. The median was only up 0.8%. So overall, a fairly, flat market, especially for our Denver market that has seen a 60-year average of 6% appreciation. And so it's a little bit less, but all in all, after all the things that happened, the bank failure, the high interest rates, and, a pretty much tumultuous economic market, the real estate market did kind of hold on, and being flat is much better than losing value. One thing about 2023 is pretty much, and typically around the holidays it's like this, but the last half of December was fairly quiet. We did see a couple listings go on the market and go under contract with multiple offers, as December was actually pretty nice with that interest rate really lowering like they called for in May. It actually happened in December. So that did bring a lot of buyers into the market, and the inventory that was there did get scooped up. Now, I did hear a stat today that our expireds are up 367% by nature of how our contracts are written. A lot of listings expire on that last day of the year. And so we did see, and our inventory was way up considering, about 5,000 active homes on the market. And now, right now, at the time of this recording, we sit about 4,000 active homes on the market about a week into January. And so that expired listing did kind of pull back some of the inventory, and that mixed with the spike in demand has already gotten us into some multiple offer situations and some situations where the buyers do have to compete again. I know as an agent, I've seen lines at listings. I was at an open house and there was about 6 to 7 groups in the first 10 minutes I was there. So the spring market, as I tell you all the time on this channel, starts in January here in Denver, and we are absolutely in it. So as we move forward, we need to keep our finger on the pulse of this, as I am anticipating the February market update to start talking about multiple offers. The interest rates, are supposed to stay pretty stagnant. We'll have some good days, we'll have some bad days, but we'll kind of hang out. And so I think that that's what we're gonna see moving forward into our hot market here in Denver. So let's talk about interest rates. What a year it was for interest rates. 5.9 to 8%, and then back down again. An absolute wild year in the interest rates. And that mixed with the new technologies and everything, information travels faster than ever. So I even talked to one of my lenders, and he said, I remember when I used to not even have to think about interest rates or have conversations about this rate or that rate for 6 weeks, right? And now he's having to keep his eye on it every single minute, every single hour, because those lenders are constantly getting shopped for that lowest rate. And so I think that that's something that, hopefully will stave off and kind of balance out, because we need to see, higher interest rates than we saw at their historic lows. But as we got into the 8s and things with our appreciation and stuff, that really put a high stress on affordability for people in our market, with the entry-level house costing almost $500,000. So as we kind of move through this and we talk a little bit about the economy, the soft landing, the Fed rate, rumored to drop, 6 times to 3 times to 2 times, whatever that may be. It seems that they've indicated that they're done raising those prices, and that's absolutely going to be something that will help the 30-year fixed kind of stabilize, we hope, as the economic, kind of instability kind of filters out. So keep an eye on that. Keep an eye on the job loss, job numbers, because as we move into the AI kind of world, there is definitely some tech companies that will be, making some layoffs and things, and people will need to, move out of that sector. AI is an absolute beast. And can be used for value, but unfortunately it probably will eliminate some jobs, as it just is such a powerful tool that will allow for time saving and things like that. So let's talk a little bit about some positive things. Here in Colorado, we saw 27,000 net migration increase. So our population increased 27,000. This includes births and migration. So we did increase that. Obviously, that's lower than the typical 74,000 that we've seen in the past. One thing of note, the largest age group entering growth is the people 65 and over. So we have more people turning 65 in that population. It's not our biggest population, but it's our biggest, kind of age range change there. So that's something to definitely keep your eye on. One of my hopes and predictions for this next year is that should increase our inventory a little bit and, give us some balance in the supply and demand. But I don't know if that's absolutely going to happen, because we have such low interest rates that people were able to refinance in and do all of that. So that's absolutely something to keep your eye on, but could be a piece of inventory spike. The other piece is that if the interest rates do kind of dip into the 5s, I think that'll put less hesitancy on the people that have the 3 and the 4 and the 5% interest rates to get back into the market, start moving up, downsizing, and all of those things. However, I do believe we'll stay in the 6s and maybe have a little bit of over 7 at some point, maybe a little bit, into the 5s at some point, but I think ultimately we'll average out somewhere in the 6s, which is where we sit now. The next thing to really keep our finger on is the taxes increase, which hopefully we'll see what Colorado is going to charge us and what we're going to pay for our taxes after they did just pass the legislation to give us a little bit of a reprieve from the increases that we've talked about on this channel, but also the insurance. Insurance premiums are high. Colorado is, the 4th highest insurance premium. Mix that with one of the lower taxing property tax premiums that is out there in the United States. However, we are seeing an increase, right? We are seeing, I read somewhere, almost a 50% increase since 2019 in our property taxes. So that's definitely something that's going to affect affordability further. So any help we can get from those interest rates is absolutely welcomed, because we have the taxes that we can't really do much about, the insurance premiums that we can shop a little bit, but we still have to have property insurance, especially associated with those loans. And so that's something to definitely focus on, and make sure that you're paying attention to your insurance premiums, making sure you're having conversation. If you need a top-notch insurance agent, I have a guy. Please comment or DM me, and I would be happy to pass his information along. I think I'll bring him on the channel sometime too, to talk a little bit more about insurance and what we're looking at. But this is going to be a story in 2024, insurance and taxes. In fact, I just did a video last week that you can find on this channel or my socials about how those tax premiums are affecting HOA premiums in those attached living communities that have that exterior maintenance insurance covered by the HOA. That's absolutely something that we are seeing skyrocket some of those HOA premiums. So check that video out if you want to get further into that. But ultimately, it's going to affect all homeowners, right? Our mortgage payments obviously include typically that escrow balance that pays for taxes and insurance. With taxes and insurance going up, some people's payments may go up as much as $1,000 a month and even higher in those higher price brackets. So keep an eye on that, absolutely. And let me know if you have any questions. We can definitely sort that out and talk a little bit of strategy surrounding that as well. So ultimately, 2024 looks to be a great year. We did have a slightly slower month in December with those 2 weeks off, and I took some time with the family, but we will be right back at it, keeping our finger on the pulse of this market, bringing you all of the information we possibly can on the economy, the real estate market, and how it affects you hyper-locally is absolutely the key. If you have any questions, you're looking to make a move in 2024, book a call with me below. I would be happy to have a conversation and make a true strategy to help you maximize your profit and your wealth through real estate. Like, comment, subscribe. We'll see you next time. Bye-bye.